It took me 3 years of saving, skipping vacations, and driving a beat-up sedan to save that $20,000. And it took exactly 45 minutes for it to vanish. I watched the screen refresh, and my stomach dropped. The project was gone, the money was gone, and the worst part? I couldn't blame anyone but myself. Hi, I'm Daniel Brooks, and you're watching Wealthic Voyage. Today, we're diving into one of the most painful moments of my financial life, the day I lost it all on a sure thing, and why that failure was actually the best investment I ever made. Let's start with a question. Have you ever felt like you were late to the party? You know the feeling. You see people on social media flashing crypto gains, flipping houses, or talking about the next big tech stock that's about to explode. And there you are, sitting with your index funds, watching your money grow at a boring 7% a year, feeling like you're missing out on the gold rush. That was me 5 years ago. I had done the hard part. I had built up a nest egg of $20,000. It was sitting in a high-yield savings account. For a lot of you, that might sound like a safety net, but for me, at that time, it felt like a dead weight. I wanted it to work harder. I wanted speed. I remember I was at a friend's gathering, and a guy I really looked up to, let's call him Mark, pulled out his phone. He showed me an app for a new, high-yield liquidity pool. It sounded sophisticated. It sounded like something the rich people knew about that the average person didn't. He told me, "Daniel, this isn't gambling, it's arbitrage. It's low risk, high reward. The APY is 18%. Ask yourself, if someone promised you 18% returns with low risk, would you take it?" My brain knew the rule. If it sounds too good to be true, it is. But my heart was greedy. I wanted the shortcut. This is where the psychology gets interesting. We often think financial mistakes happen because we are uneducated. But sometimes, financial mistakes happen because we think we're the smartest person in the room. I did my research. I read the white papers. I looked at the charts. I convinced myself that I wasn't being reckless. I was being strategic. I transferred $20,000 onto a platform I barely understood. It was a decentralized finance protocol, essentially code on a blockchain. For the first 2 weeks, it worked. I saw my balance tick up. $20,200, $20,500. I felt a rush of adrenaline. I thought, I've cracked the code. I'm a financial genius. But have you ever noticed that when you touch a hot stove, you don't feel the burn immediately? There's a split second of, "I'm fine," before the nerves scream. One Tuesday morning, I woke up, grabbed my coffee, and opened the app to check my earnings. The interface was glitching. The numbers were frozen. I went to Twitter, now X, and searched the name of the platform. The hashtag was trending. Rug pull. The developers had drained the liquidity. They had taken the money and run. It was a sophisticated scam, a heist executed by lines of code. My $20,000 wasn't just down, it was zero, unrecoverable. I sat there in my kitchen. The silence was deafening. I didn't cry. I didn't scream. I just felt hollow. I felt stupid. I felt like I had betrayed my future self. The interface was glitching. The numbers were frozen. I went to Twitter, now X, and searched the name of the platform. The hashtag was trending. Rug pull. The developers had drained the liquidity. They had taken the money and run. It was a sophisticated scam, a heist executed by lines of code. My $20,000 wasn't just down. It was zero, unrecoverable. I sat there in my kitchen. The silence was deafening. I didn't cry. I didn't scream. I just felt hollow. I felt stupid. I felt like I had betrayed my future self. Losing money is weird. It's not like losing a job or a relationship. It comes with a specific kind of shame. I didn't tell anyone for months. I was embarrassed. I host a finance channel. I'm supposed to be the guy who knows better. I went through what I call the 3 phases of financial grief. Phase 1, denial. I checked the blockchain explorer obsessively. I thought, maybe it's a glitch. Maybe the money is just stuck. I spent hours reading forums, looking for a fix that didn't exist. Phase 2, anger. I was furious at the scammers. I was furious at Mark for recommending it, though, to be fair, he lost money too. But mostly, I was furious at myself. I knew better. Phase 3, the fear. This is the most dangerous phase. After you get burned, your instinct is to never go near fire again. I almost pulled all my remaining investments out of the stock market. I almost put my money under a mattress. Have you ever been there? You make one mistake, and suddenly you want to quit the game entirely? But here's the thing. Inflation is a thief that never sleeps. If you quit investing because you're scared, you lose anyway. I had to snap out of it. It took about 6 months for me to look at that loss as a lesson rather than a wound. And when I finally dissected it, I realized that my $20,000 tuition fee taught me 3 things about real wealth that no book could. Lesson 1. Risk is not a button you press. In video games, you can toggle the difficulty setting. In finance, risk is invisible. I thought I was buying an asset. I was actually selling my safety net for a lottery ticket. Real wealth doesn't come from high-risk bets. It comes from boring consistency. Lesson 2. Complexity is a warning sign, not a status symbol. I fell for the trap of complexity. I thought, this is hard to understand, so it must be advanced. But true wealth building is incredibly simple. Spend less than you earn. Invest the difference in a diversified portfolio. Wait, that's it. When someone tries to sell you a complicated structure or a liquidity pool, run. Complexity hides fees, and it hides risk. Lesson 3. Wealth is how you sleep, not what you drive. When I had that $20,000 in the high-yield savings account, I slept like a baby. It was safe, it was slow, but it was mine. The moment I moved it into that smart investment, my anxiety spiked. I was checking the app constantly. Real wealth should bring you peace. If your investments are causing you stress, they aren't investments, they are gambling chips. I realized that I wasn't building wealth. I was chasing a dopamine hit. I wanted the story of how I made 50% in a month. I didn't want the story of how I made 8% in a year, but the 8% a year, compounded over time, builds empires. The 50% a month usually ends in a crash. So, here is the truth. I lost $20,000. It hurt, but if I hadn't lost it then, I might have lost $200,000 10 years later when I had a family and a mortgage to support. I paid my tuition early. I want to leave you with this challenge today. Look at your portfolio. Look at your play money or your side bets. Are you investing or are you gambling? If you can't explain the investment to a 5-year-old in 2 sentences, how it makes money, and where the risk is, you shouldn't be putting your hard-earned cash into it. Don't let the fear of missing out drive your decisions. Boring is beautiful. Slow is fast. Take that $20,000 lesson I paid for, put it in your pocket, and stick to the fundamentals. Because at the end of the day, real wealth isn't about the big win. It's about never losing the game. Thanks for watching. If this helped you avoid a mistake, share it with a friend who needs to hear it. Stay safe out there, and I'll see you in the next video.